All right, well, good afternoon, everyone. My name is Tom Lilley from Unity Bank. I'd like to thank everyone who registered today and is listening in to our webinar on PPP Forgiveness. Everyone's line should be muted, but just in case yours is not, please keep it on mute just so we don't have any background noise. If you have a question, you can use the chat feature and type in your question, or we'll have an email address later on that you can email it directly to the bank, and someone will get back to you as soon as possible. We do have several questions that were submitted with the registrations, and we'll answer as many of them as we can after the presentation, time permitting. Let's see, if you're having trouble with the audio, sometimes it works better if you call in and not use your computer's audio. Just in case you don't have the number, it's 408-418-9388, and the access code is 132-946-1042. That was sent out with the invite as well. All right, so with the PPP program, more than 5,000 banks nationwide participated in the Paycheck Protection Program since it launched on April 3rd. And we've approved over $530 billion in loans for small businesses across the country. At Unity Bank, we funded over 1,200 PPP loans. And the questions we're getting now are a lot of, now that I have a PPP loan, what do I have to do to get it forgiven? So again, my name is Tom Lilley, and I run the SBA department for Unity Bank. I've been involved in SBA lending since 1995. I've worked at both small community banks and large nationwide lenders. Before I came to Unity, I started up 2 lending divisions for 2 New Jersey banks. We thought it'd be a good idea to have a webinar today for our own PPP customers, just to go over the program and let you know what we know so far about forgiveness. We're extremely lucky to have 2 experts with us today on PPP lending and SBA lending. Erika Pearson is a lender relations specialist from the SBA. She's going to walk us through a PowerPoint presentation developed by the SBA to explain the forgiveness process. So you'll be getting information today directly from someone at the SBA. So Erika, thank you for joining us. We also have Tom Hofstetter today of Schenck, Price, Smith & King out of Florham Park. He's one of the most prominent SBA closing attorneys in New Jersey. He also teaches classes to SBA lenders across the country. Tom's the closing attorney for over 20 banks, and he's been involved in SBA for probably over 30 years. He'll also be available to answer some questions at the end, so that we get that legal perspective. So Tom, thank you for joining us. I want to remind everyone that the the webinar is being recorded, so if you missed anything or if you just want to check something, you can go back and check. It'll be saved to our website. That's www.unitybank.com. You click on the COVID-19 update banner, and that'll take you to the page with all of our COVID resources, and the recording will be found there. Okay, so with that, Erika, you want to get started?
Absolutely. Thank you very much, Tom. Okay, welcome to the SBA and Unity Bank PPP Forgiveness, actually it's Unity Bank and SBA, but the PPP Forgiveness Program. All right, couple housekeeping things. This presentation is an introduction to PPP Forgiveness, application and process. Now, this says introduction. We are going to get into the meat of this, and it may get a little technical, but it is all for to help you apply for your forgiveness and the documentations and things that you need. It is your personal responsibility to review the guidance documents that are located on SBA.gov and Treasury.gov to make sure that you're up to date on the most recent updates that have come out, because as you know, things have changed frequently with this program over the last couple months. This presentation is current as of the guidance received on June 25th, 2020. Any questions? What we're going to do is please put them in the chat so that Unity can keep a record of your questions. We'll answer a few of them at the end, and then, like Tom said, we'll get back to you. Okay?
Yeah, and Erika, this is Tom Lilley again. Any questions that we get from emails, we will most likely post the questions and the answers on our website as well.
Wonderful. That's good reference for everybody. Okay, resource partners of the SBA. You have your you have Unity Bank available to answer a lot of your PPP questions. If you have other questions to fill out the application, to put together the business plan from here on out, you have several partners that the SBA handles, the Small Business Development Centers, the SCORE, and the Women's Business Centers. And they can help you fill out the application, gather documents, and submit them to Unity Bank for review. Resources and links. We are going to talk about the EIDL loan very briefly because it does interact with the PPP loan at one point. So there are EIDL loan contacts on here, our New Jersey District Office, PPP related content, and also the forgiveness guidance. So there's some resources here that will be available. Tom, will you be sending out the presentation or will you have it on your website?
We're going to have it recorded and it'll be available shortly after it ends.
Okay, wonderful. All right. Recently, the President extended the PPP program. It was an extension from the very last one that we had. And that last one had 7 key changes in the program that I'm sure a lot of you are very familiar with. But this last extension of the PPP program just extended the previous program. So the 7 key changes, the first one is that the covered period for loan forgiveness went from 8 to 24 weeks, or December 31st, whichever comes first. And that means that you have 24 weeks to use up the funds that you received for your PPP program, PPP loan. And after that, or after you wind up using your funds, you can apply for forgiveness. And we will go into a lot of detail on all these changes. So just hang tight for answers and questions. So if you currently are on an 8-week program and you want to go to the 24-week program, you can do that. I would just suggest that you notify Unity regarding the changes that you need to make so that they know what you're planning on doing. The other key change lowers the requirement that the business owner spend 60% of their payroll costs of the loan, 60% of the loan toward payroll costs. It used to be 75. If the full amount is not spent of the PPP loan, then there's a part that is not forgiven, then the balance will become a loan. Now, you don't have to use just 60% of your loan toward payroll costs. You can use 100% toward payroll costs, but you have to do a minimum of 60% in order to qualify for forgiveness. The rest of it is we'll go over in more detail. It also provides for a safe harbor option to protect you from reductions in forgiveness due to reductions in your payroll. And there was also a safe harbor for loan forgiveness based on reductions in your full-time employees. We had the increase in maturity, so the length of your loan has been increased to 5 years for loans approved on or after June 5. If you are approved prior to June 5 and you have a 2-year maturity on your loan, you do need to call Unity and you both need to agree that you're going to go to the 5-year and complete the appropriate documentation because your documents do say that you're in there for 2 years. Another change, extends the deferral period during forgiveness. So when you remit your loan forgiveness to Unity, your loan stays in deferral during that entire period. If you do not apply for forgiveness, your deferral period ends 10 months after the end of your loan forgiveness period. It removed restrictions for participating in the deferment of Social Security payroll tax. You can now defer the payroll tax through December 31st, 2020, and you can pay the balance deferred, half on December 31st, 2021, and half on December 31st, 2022. Okay, when you are calculating your okay, it just fell out of my head. When you are calculating your employee number and the income that you're making, and you compare it to 2019, geez, what a day. Your 20-year calculation, you would go and compare them both, okay, at a certain time frame. So if it's February to March in 19, you do February to March in 2020. If you have a seasonal business, you would use the 12-week period that applies when you are making your money. So if you have a surf shop and you don't start making money till June, then you use June plus 12 weeks as your expense period, okay? Hopefully that's clear. If it isn't, please let Tom know on the chat and we'll go over that again. Okay, now if you have an idle loan and you're now getting a PPP loan, there are some interactions there that need to be addressed. You cannot refinance your idle loan with a PPP loan when the funds from the idle were received between January 31 and April 3, 2020. It also is not required to be refinanced with a PPP loan if your funds were received in the same time period and the loan was for purpose other than payroll costs. Those are two very specific situations, but there's a lot of people in them, so I wanted to go over that. Now, the question is, what happens to your PPP grant from the idle loan, your advance, when you apply for forgiveness? The direction that we've been getting, the guidance that we've been getting is not clear at this point. That's why this is grayed out. We will be getting further direction in the future. We've put it up through the SBA at this point to get them to clarify that, and then we will get the information out to the banks. And also, you should be monitoring SBA.gov and Treasury.gov for those answers. However, your idle grant money received does not need to be repaid. Okay. When can you apply for forgiveness? You can apply for it anytime after the loan proceeds have been used. You can apply on or before the maturity date of your loan. And you can also apply during your covered period, so during your 24 weeks, if all of the loan proceeds for which you have requested being forgiven have been used. So you have flexibility as to when you can apply for your forgiveness. It's good that you apply for it as soon as you're ready, because it will help in the end. It'll help Unity and it'll help the SBA with volume. And it'll help us review things faster. Okay, applying for PPP loan forgiveness. There was a revised loan forgiveness application. It was 5 pages separated into 5 sections. For the lender, you would give the application and the calculations, which is page 1, certification page 2, and Schedule A page 3. For record keeping, you want to keep your Schedule A worksheet, your borrower demographics, and the instructions. That does not go to the lender. For the Easy Form, that has came out with this last update. The application is only for specific businesses, all right, specific situations. And here they are. That if the borrower is self-employed and the business has no employees, you can use the Easy. Salaries or wages from your employees were not reduced more than 25%, and the number of hours that your employees worked were not reduced. The third one would be you experienced reduction in business activity as a result of health directives, which I think all of us on the phone had experienced that, and you did not reduce your salary wages for your employees more than 25%. So again, very specific situations to use the Easy Form, but it does make it easier, obviously, to apply.
And Erika, this is Tom Lilley.
Yes.
Just chime in here. There's no dollar limit on the Easy Form, correct?
That's correct. I mean, as far as using
so if you have a $100,000 loan or a $10 million loan, you can use the Easy Form as long as you meet these conditions.
That's correct.
Okay.
Yeah, that's correct. Let's see. To the application, 3 pages separated into 3 sections. To your lender, you would do the application and the certification. You would keep your borrower demographics and your instructions. You can find the applications and the instructions on sba.gov/PPP, or you can go to treasury.gov. Treasury.gov has got everything broken out. There's 2 different links for the instructions and for the forms. And they also have all of the guidances that have come out. So if you want to reference back to something, you can pull it all from there. It's all on the SBA website as well, but I think the Treasury one's a little easier to use.
Hi, Erika. This is Tom. I'd just like to give a shout out where it's very, you're doing a great job of summarizing very, wide-ranging issues that have developed, with the process of forgiveness. A very easy way to find information, and this is a shout out to a trade organization that we many of us are involved in. It's called NAAGGL, NAAGGL, and those sites are right there. The SBA site is hyperlinked there, as well as the Treasury. And they've summarized and categorized all of the IFRs and all of the FAQs. It's very easy to find. So you just have to Google NAAGGL, and you'll see the Treasury site. You'll see the SBA site. Sometimes and you should go back and forth, because sometimes either agency doesn't keep up with the other, because these are fast changing rules. We've written a number of alerts, only to find by the end of the day they're obsolete because a new IFR came out. So that's a good place to start and check. Just giving a shout out to this trade organization that's very involved, and has also done a great job in trying to advocate for small businesses in this program. So thank you, Erika.
Well, you're welcome. That's a fabulous suggestion. The more resources we have to make it easier for us, the better, because certainly this is not an easy process. And here we come to the business documents that you need to complete your application. You'll need a calendar. You'll need a calculator. You'll need your loan documents for reference, your business records for use when you're applying. And we're going to go over what business records you're going to need. And the last one, and most important, is patience. There's a lot of calculations. There's a lot of information you have to gather. So have patience filling out the form. Again, you can contact Unity for help if you want to, or any of our business partners. You can also contact them as well. Okay, the first thing we have to explain is the covered payroll period. This is the period from your disbursement date to your 24 weeks afterward, or the 168 days, okay? This is a really bad slide as far as looking for a PowerPoint, but it's got all the detail on it. The covered period is from exactly the disbursement date to exactly 168 days later. The alternate payroll covered period, okay, is for those businesses that have, let's say they have payroll biweekly, and you close halfway through your payroll period. And you want to include that payroll period in with your numbers, either the first week or the last week. So you're actually closing in the middle of a payroll period, and you want to include that next payroll period so that you can use all of your funds. It's not as big of a deal now that we have 24 weeks to do it, but you know what? Everybody's in a different situation. So, for example, if you have, you close on Monday, April 20th, and that's the first date of your pay period, is April 26th, the first day of your alternative pay period is April 26th, which is the first day of your pay period, and the last is October 10, okay, which is 168 days or 24 weeks later. In no case does the alternative period extend past 12/10/2020. So when I explain covered period from here forward, I'm going to refer, it's going to be either one of these periods. It's either the covered or the alternate, because everything applies to both the same, except for when you apply, use up your funds. Okay, your required FTE, or your full-time employee calculation. This is on part of the application process. And you may receive less of your forgiveness amount based on your average weekly number of full-time employees during the covered period, if it was less during your chosen reference period. And if you remember the part of this presentation where I stumbled, that's what I was trying to explain, was the chosen reference period. When you're referencing a period in 2019 to compare to your period in 2020, that's the covered reference period. For each employee, using either payroll period that we just discussed, you convert your part-time employees to full-time equivalent. So that means you could have one of two ways of doing this. You can calculate a percentage of your employee by taking the average amount of hours paid per week, divide it by 40, and round to the nearest tenth. So you could have an employee that's 0.75. In no case would they be over 1.0. If you want to make it easy on yourself and you have a lot of employees and you don't want to go through individual calculations, you can simply assign a 1.0 for employees that work 40 hours or more and 0.5 for employees who work fewer hours. So that's how you would calculate your full-time employees. What is a payroll cost? What is it that is covered in that 60% of your Paycheck Protection Loan? First part of it is compensation to employees. They must be residents of the United States, residents of the United States. And the form of the compensation would be salary, wages, commissions, or any similar compensation, cash tips, in the absence of such records, a reasonable good faith employer estimate of such tips is fine. So that's in reference to the tips specifically. Payment for vacation, parental, family, medical, or sick leave. There is allowance for separation and dismissal. Employee for payment for employee benefits, premiums, and retirement. And payment for state and local taxes. Now, a big question is, I'm an independent contractor. I don't have any employees. I'm a sole proprietor. How do I calculate? How do I pay myself? How do I show that I use these funds for my income? You would show them as wage, commissions, income, or net earnings. However you report it on your Schedule C, you would do similar to this calculation. So if, let's say, you you get commissions and you don't normally get commissions, commissions net expenses. You want to provide enough money to cover your typical commissions for your pay period, reference pay period from 2019 to 2020. Summary of eligible costs for payroll. Payroll costs paid and incurred during your covered period, whether it's 8 or 24 weeks. Costs that are paid on the day the paychecks are distributed or the day that the ACH credit transaction goes through. Payroll costs are considered incurred on the day that the employee pay is earned. Payroll costs incurred but not paid during the period's last pay period. This is the alternate covered period explanation. You can apply for forgiveness if it's paid on or before the next scheduled payroll date. trying to explain that earlier. For each individual employee, the total amount of cash compensation eligible for forgiveness may not exceed the salary of $100,000 for the covered period. You would count payroll costs once when they're paid. You don't want to double dip on payroll costs. Okay, eligible costs for non-payroll. Now this is your mortgage, rent, and utility. This is for the 40% of the loan that you can use to anything other than payroll costs. And you can use this loan for 100% of payroll costs and be done with it, or 60%, 70%, 80%, whatever percentage you use is fine, over 60. The balance can be covered with payments of interest for mortgage obligations that was in place before February 15th. Same with rent, business or lease payments that was in place prior to February 15th, and covered utility payments. This would be electricity, gas, water, transportation. Now, transportation is a big question mark, and we'll have to get that explained a little better in the future here. But transportation was a question mark. We weren't sure exactly what they meant by that. Telephone or internet access. Again, must have all been in place before February 15th. An eligible non-payroll cost must be paid during the covered period or incurred during the covered period and paid on or before the next billing date, even if the billing date is after your covered period. So you want to make sure that any expenses that you pay are paid at the beginning of your pay, from the beginning of your payroll period to the end of your payroll period, or your covered period, sorry. And if the billing date to pay that bill is after the covered period, you can include that payment. Eligible payroll costs cannot exceed 40%. Non-payroll costs cannot exceed 40%. And again, don't double dip on obligations that have been paid. Frequently asked payroll questions. Are salary, wages, commission payments to furloughed employees, bonuses, or hazard pay during the covered period eligible for loan forgiveness? And the answer to that is yes. Yay. Are advance payments of interest on mortgage obligations eligible for loan forgiveness? This is a very typical question I get a lot, and the answer is no. There is no look-back period for the payment on mortgage. You have to do the mortgage interest payments from the disbursement date forward. Okay. Here's your proof of payroll documents that the lender's going to need, that Unity's going to need in order to process your forgiveness application. For payroll, they're going to want to see bank account statements or third-party payroll statements from a service provider documenting the amount of compensation paid to your employees. Tax forms for the periods that overlap with the covered period, which would be your Form 941 for the IRS, and the forms for your state quarterly business and individual employee wage reporting tax filing that you file with the state. Payment receipts, canceled checks, and account statements document the amount of any employer contributions to the healthcare insurance and retirement plans that you include in the forgiveness amount. So you'll have to have payment receipts for that as well. That calculation is on your Schedule A, PPP Schedule A. Payroll documentation for the Easy application. It's all the same. If you have the average of full-time employees on the payroll before January 1st and at the end of the covered period, it goes along with your questions, your qualifications for Easy application. So you need to be able to qualify with your full-time employees during that pay period. Okay, documents for full-time employees for submission to Unity. Documentation the average number of full-time employees on payroll between February 15th and June 30th, and the average number of full-time employees between January 1st and February 29th, that's 2020, the prior is 2019. In the case of a seasonal employer, you would use your reference period during your busy period, so June through September. May, it's actually May 1st through September. Let me see here. Documents may include payroll tax filings reported to the IRS, which is your 941, state quarterly, business and individual employee wage reporting, and that's relevant to the state. Bear with me here. We're almost through the terrible slides. I say the terrible slides with a lot of writing on them. Non-payroll. This is for your mortgage interest, your rent or lease payments, and the utility payments. For mortgage interest, the SBA is going to want the lender amortization schedule for your mortgage payments and the receipts that you paid, which could be canceled checks, or you can get a lender account statement from 2020 for 1 month after the covered period, up to 1 month after the covered period, showing that you paid the mortgage interest. Let's see. Okay, for rent, excuse me. For rent, hold on a second, I'm sorry. I'm going the wrong way. And see, they all look the same, so I can't tell where I was. Let me see here. Documentations for full-time employee, non-payroll, payroll. Okay, that's where we were. Tax payments, just went through that. This is for your non-payroll submissions. Okay, sorry about that. Mortgage interest. We just went through that. The lender amortization schedule and receipts that you paid, or a lender account statement from 2/20 on to 1 month after your covered period will show that you paid for your mortgage interest. Business or lease payments are going to want a copy of your current lease and receipts of current checks from the covered period, or from February 20th through your covered period through 1 month after the end of your covered period. So they want to see from February on through the end of your covered period. Business utility payments, same thing. They want to see copies of your invoices from February 2020 through the month past your covered period. They want to see receipts, canceled checks, or account statements verifying that those payments were made. Again, if your utility payment that you're using is due a few weeks after the end of your covered period, you can still include that and then show that you paid it. Also, backing up a little bit, for the business rent and lease payments, if you don't have canceled checks, maybe you paid by cash, you can go to your lessor and get a statement from them that from February 20th through your covered period and 1 month after that you made your payments. So it's either a copy of your lease agreement and canceled checks, or a letter from your landlord. All right, record keeping. This is what you are required to keep for 6 years. This is not what you submit to the lender, but you need to keep these in your records. Keep in mind that in 6 years, you're not going to remember why you did certain things. I mean, of course, I'm assuming you're like me, that I can't remember what I did 3 days ago, but you're definitely going to want to keep documentation here for 6 years. That's the documentation supporting your PPP Schedule A, documentation supporting each list of each individual employee that you use for Schedule A, documentation regarding any job offers or refusals to accept the restoration of your reduction in hours. You want to keep that documentation, and we'll go over that in a little bit as far as what happens with all that. but anything you've sent out to your employees and they have refused, you want to keep that documentation because it's very important.
Right.
Documentation that you are unable to operate between February 15th and the end of your covered period due to compliance with the Secretary of Health, any federal, state, or local restrictions that they're putting on the company. As you know, with restaurants, they're really restricted right now. So our gyms, things like that. You want to have documentation that shows that those were put in place at the time that you were in your covered period. And also, if you're using the safe harbor, you want your documentation that supports your Schedule A worksheet. Okay, the application. You are exempt from reductions in loan forgiveness based on your full-time employees if both conditions are met. You have reduced your full-time employee levels in the period beginning February 15 and ending April 26th, and you restored them no later than 12/31. So if you had that scenario, you would not have a reduction in loan forgiveness. The safe harbor 2, based on, you will be exempt from the reduction in loan forgiveness based on your full-time employees, even if there is a reduction in full-time employees, as long as the business owner, in good faith, can document that you are unable to operate your business after February 15th due to compliance with federal, state, and local requirements issued between March 1 and December 31st. And I think that's probably about 99.9% of us are in that situation. And again, the required definitions, federal, state, and local requirements is all defined at the bottom of this slide. Okay. Business owner could be eligible for an exception to the reduction if you are unable to hire individuals who were employees of the business owner on February 15th or unable to hire them for unfulfilled positions by December 31st. Excuse me. You need to show that you made a good faith effort in writing to rehire your employees during your covered period and that offer was rejected by the employee. The offer should be for the same salary or wages and same number of hours as earned by each employee in the last pay period before the reduction in hours. The offer would need to be rejected by such employee, and you need to maintain the records documenting the offer and its rejection. Now, a lot of people say, well, with this rejection thing, what happens to their unemployment? The unemployment is a state issue, and the fact that they rejected your offer for employment is an issue with their unemployment with the state, and the federal program is not involved in any of that. So we just need to see that they rejected your offer. I know that happened to a lot of us because the unemployment was offering an extra $600 a week, and everybody was making more money than they would normally, and they didn't want to come off of unemployment. And that was very, very, very rampant. I mean, I hear that 10 times a day that each business owners run into that. So there is an exception to your full-time employment reduction for that scenario. Okay, what effect does the business owner's reduction in employees' salary or wages have on the loan forgiveness amount? If your reduction is in excess of 25%, it'll result in a reduction in the loan forgiveness amount. The calculation is performed on a per employee basis, not your aggregate. How should a business owner seeking loan forgiveness account for salary and wage reduction based on a reduction in the number of employees? It applies only to the portion of the decline in employee salary and wages that is not attributable to the full-time employment reduction. Okay, one last question. What effect does a reduction in business owners' number of full-time equivalent employees have on the loan forgiveness amount? You must first select the reference period and we've talked about this several times, your 19 reference period, 20 reference period, or in case of seasonal employer, when you are busy. If the average number of full-time employees during your covered period is less than the reference period, the total eligible expenses available for forgiveness is reduced proportionately. For example, if a borrower, if you had 10 full-time employees during the reference period in 2019, and this declined to 8 employees during 2020, the percentage declined by 20%, and thus only 80% is available for forgiveness. That's where the calculation of a portion of an employee or a half of employee would come into place if you are really close on your calculations. All right, application process. The business owner submits the loan forgiveness application to the lender. The lender has 60 days to issue a decision on your application to the SBA. The SBA has 90 days to review and determine if the borrower is eligible. Now that's 5 months. So when you submit your application to the lender, you shouldn't even be looking for a response until 5 months have passed. Now, could it happen earlier? Absolutely. It depends on when you apply and how many people apply at the time that you apply. So you don't want to wait till the last minute, because as you know, that would be a landslide of applications and it will take the full 5 months. So don't call in the first 3 months, because it won't be ready for 5 months. That'll help all of us answer questions that need to be answered during that period. Once the SBA notifies us that you're eligible for the forgiveness, we tell the lender, and the lender, Unity, is responsible for notifying you. If only a portion of the loan is forgiven, or if the forgiveness request is denied, any remaining balance must be repaid on or before the 2 or 5 year maturity of the loan. Keep in mind, interest does accrue during the deferment period. So as you're waiting for your forgiveness application to process, interest accrues on the loan during that period, and will be included on a pro rata basis depending on how much was forgiven and not forgiven. If you're 100% forgiven, you don't have to worry about the interest that accrues. Any questions other than the million of them that I saw come up on the chat box? You can contact, we'll address some questions now, and you can also contact communications@unitybank.com, and they will field the questions and get back to you as soon as they can. And with this, I will turn it back over to Tom.
All right, thanks, Erika. There's a lot of good information in your presentation there. We will answer some questions now. We have a lot that popped up. What I'm going to do is the ones that we can't get to today, I'm going to try to compile into a document, and we will shoot that out in an e-blast to everyone. So if we don't get to it today, we will get to it within the next several days. First of all, the first question we have is it's regarding bringing people back who were laid off. Maybe Tom, you can answer this question, discuss if they refuse to return, or if there are any implications for that.
Sure. Yeah. This deals with the full-time equivalent reduction exceptions. I'll just give a general comment. A good way to start with understanding the process is to read it's a 5-page read, not the most interesting read, of the instructions of the SBA Form 3508, which is the forgiveness application. And they give you a lot of detail as to either exceptions or which Erika has gone over, or the full-time equivalent reduction safe harbors. With respect to a situation where somebody doesn't want to come back, when you have these and other scenarios related to any full-time employment reductions in various cases, do not reduce the lender's loan for forgiveness. Okay, so it doesn't reduce it in various scenarios, and they include any positions for which the borrower has made a good faith written offer to rehire to an individual who was employed on February 15th, 2020, and the borrower was unable to hire similarly qualified employees for the unfilled positions on or before December 31st, 2020. So that answers, the general question there. Any positions for which the borrower, made a good faith written offer to restore any reduction in offers at the same salary or wages during the covered period or the alternative covered period, the 24-week period, and was fired for cause, voluntarily resigned, or voluntarily requested and received a reduction of hours is also subject to that exception. Okay.
All right. Thanks, Tom. Another question we have is, if you choose the 8-week period versus the 24-week period, is the percent of payroll at the original 75% or 60%, or is the 60% just for the 24-week period? I'll answer this one. The percent that you use for payroll for all PPP loans was reduced to 60. So if you were approved prior to the change being made, it's still at 60% for you. So you have to use at least 60% of the proceeds for payroll, and the remaining needs to be used for other eligible expenses like rent, utility, interest, etc. Anything that's not used for the eligible purposes won't be forgiven, so everyone is at 60%. Let's see, another question we have here is, are smaller loans forgiven without filling out a long application, or loans under 150? Tom, you want to take that?
Sure, that's a good question, Tom. I think the intent of trying to do the Easy Form was really kind of focused towards smaller loans, though there is no restriction on the dollar amount with respect to filling out an easy application. It would just seem intuitive that a larger business, a more complicated business might require the points set forth in the longer application. Having said that, Congress is aware that this is a challenge, this forgiveness, and it's also going to be a major challenge for the lenders who did these loans. Most of the lenders, the vast majority, were loans under $150,000. So right now, there is some proposals before Congress. There's bipartisan support to greatly simplify the application process for smaller loans. Currently, it's looking at loans 150,000 or less, and the pledge is they want to be able to put this on one page. Stay tuned. As Erika indicated, everything is changing quite rapidly. Look at your alerts. Keep a tune. And as I mentioned earlier, a good place to know exactly where you are is to go to the NAAGGL website, and they monitor all these changes on a daily basis.
All right, thanks, Tom. Yeah, most of the loans were under 150,000. I know we did a little over 1,200 loans, and over 1,000 were under 150. So if those changes do happen, that will simplify things a lot for our customers. Another question we have here is, if you're a one-person business and you use the money as your own payroll, what documentation do you need to prove that you paid yourself? Erika, you want to handle that?
Sure. What I've explained to my borrowers that have called in over the last couple of months is you have an income number that you've used for your reference period for 19. So let's just say it's $100,000. Well, let's do 50. And you're doing the 24-week period. You want to make sure that you take that money over the 24-week period in regular installments. You can show it by transferring it from one account to the other. You can show it with a payroll form. Okay, you can fill it out and show what you paid when. Your bank statements would show that you've paid the money out. If you paid it out in one lump sum and you used 100% of the payroll for the payroll, you have to make sure that your reference dollar amount covers that 24-month period. So keep in mind that you got to go back to your reference amount to determine how much you're going to use of your loan. So for instance, if your reference amount showed that you made $100,000 and you have a $200,000 loan, you can't pay yourself $200,000. You can only pay yourself $100,000. that's not a good example because that's just 50%, but you get the idea.
Right.
Okay.
Okay, good. Thank you. We have a question here. Why can't small businesses apply for more loan money since at the time, many of us were told we needed to use the money within 8 weeks? The 8-week period is time that was given to use the money. It was extended to 24 weeks because some businesses, like say a restaurant that's been closed or only can operate at 30% of capacity right now, they realize they're not going to have, in 8 weeks, they're not going to have enough time to spend all of that money. So that's why they extended it to 24 weeks to give them more time. It doesn't mean you can apply for more money. It just means you have more time to spend it. I think the original feelings back in March were that the economy would be closer to back to normal by this time. And when they realized that it was taking much longer than expected to return to somewhat normalcy, that's why they extended it to a longer time. So again, you have more time to spend the money, but it doesn't mean you can qualify for a larger loan amount.
Yeah, Tom, if I could just chime in on that a little bit. The intent of the program, it was one loan per customer, and as Tom indicated, is for a very short period of time. However, you know, as many of you have seen, the rules have changed throughout the process. There was an exception for partnerships where partner income was not allowed initially. They did come up with an IFR, and they would allow partnerships to amend their application to the extent that a 1502 report was not made. A 1502 report is what the bank would report to the SBA that the loan was dispersed. So that was a small exception where you were allowed to amend your application to get more money.
That's true.
And that's specifically only. Yeah, I'm sorry, and that's, just keep in mind, that specifically can only be done prior to when the loan was reported to the SBA. I know you had said that, but just I'm reiterating it because that's a big sticking point with a lot of people.
Correct.
That once the loan has been reported as dispersed to the SBA, there can be no changes made to your loan regardless of the program changes that have come out of Congress.
Absolutely.
Right, and any loan that was funded last month has been reported to the SBA now, so those won't be able to be changed. Let's see. Tom, we have a question here. Rent paid to an affiliated company, is that qualified as a forgivable expense? So I guess if you have an operating company that you own and you also own the real estate, but the real estate is under another entity and you pay rent to that entity, is that considered eligible for forgiveness?
Yes, the answer is yes. The short answer is, and that is a typical structure, particularly with SBA loans, where you have a real estate holding company, what we call an EPC, renting to an operating company. Those are there doesn't seem to be any restrictions on that. However, I caution everybody. You know, I don't know if that would cover an exorbitant rent type situation or backdating of a lease. So I caution everybody to be very careful when you have related parties, because you're at the end of the day, you're all subject to fraud and false claims acts and so on and so forth, which also goes to a larger question is, are these files going to be audited? Every one of these loans, by the way, is subject to audit. I mean, there's thousands and thousands of loans, and practically speaking, they won't be audited, but it's just like filing your tax returns. You are subject to audit. That's why you have to keep these records for 6 years, as Erika mentioned. As Secretary Mnuchin has said, they will audit loans in excess of $2 million. So that's just a real concern to keep your records, and particularly if you have these related party leases, make sure they're close to arm's length, because I think they could be challenged. Or stay tuned. There could be other IFRs which could get into the weeds on that type of forgiveness situation.
Okay, Tom, if that situation occurs, if the borrower could prove that the rent they're paying is at least near market rates, would that be a safe bet?
That would be a safe bet. That would be a safe
bet.
The glaring situation would be if there was exorbitant rent paid to a related company. So
sure, right.
Just to get rid of all your forgiveness, money at that point. So again, That's why I emphasize, that this is all these files are subject to review. Many of them won't be, like your tax returns, but they could be. That's why you got to keep those records and be very careful when you're filling out these applications and putting in these figures.
Right. Okay. Erika, I have a question for you. I saw this pop up on the chat as well, and I received this question from some borrowers too. What, if anything, is required to support economic impact of COVID to qualify for forgiveness? What kind of documentation do they need to provide to the bank to show that they have been affected?
That's a very good question. While we haven't received any formal direction on what needs to be used, my personal outlook on this is that, let's say the New Jersey business, Erika, Commerce, New Jersey, oh geez, hold on a second, Chamber of Commerce, there you go.
Chamber.
The New Jersey Chamber of Commerce every day puts out information on their website as to what Murphy has decided, Governor Murphy has decided that needs to change. So you can definitely go and save those communications, print them out. I would always put everything in print if you can, because you never know what happens to your computer. But definitely you can pull it off of there. And there's plenty of press that comes out on a regular basis that, wherever you found out that information from that you can't open up, that's what you want to include with your paperwork.
Okay, great. Thanks. I see we're at 2 o'clock here, so I guess we'll start wrapping this up. At Unity Bank, we're going to have a procedure in place that will walk each customer through the forgiveness process. We will be emailing out a link to each of you that will take you to a website where you will answer questions, and they'll be used to complete the application for you, so there'll be a lot of help there. You can also upload your documents to that website, and they'll come straight to the bank. So that's how we're going to go about doing this. I'm told this should be operational beginning of August. So if you want to apply for forgiveness before then, we'd have to do it manually with paper. After August, when this goes online, again, you'll be notified via email, and you can just fill it out right online. I hope everyone here, gets 100% forgiveness, but that's probably not going to be the case. So if a portion of your loan is not forgiven, it will convert to a term loan, as Erika said. We originally did all of our PPP loans at Unity with a 2-year term, and then they changed that to a 5-year term. So right now it's at 2 years term. We would be willing to extend it to 5 years. The bank and the borrower both have to agree to that. So we'd be willing to discuss doing that. Just as an example, if you had, say, $50,000 that was not forgiven, with a 2-year term, your monthly payment on that is going to be $2,100. At a 5-year term, it'd be only $850. So there's a big difference in the payment per month between 2 and 5 years. So something to consider for your cash flow if you do have a portion that's not forgiven. There's also no prepayment penalty. So if you took the 5 years but you wanted to pay it off in 2 or 3, you'd be able to do that with no penalty. I just want to remind everyone that about the EIDL loans, they're still out there. Go to SBA.gov and you'll find a link for the EIDL loans there. Just another resource that you could investigate. I just want to thank everyone for joining us today, Tom and Erika. There was a lot of great information, and I hope our borrowers learned a little bit more about the forgiveness process. As I said before, if you have a question, you can email it to communications@Unity Bank. I'll be going through them and try to compile them into a document, which will then be emailed out to everyone. So if we didn't get to your question today, I'm sorry, but we are out of time, and we will send out those answers as soon as we can. The recording's available on our website if you want to check it out. And thanks again for Tom and Erika.
Thank you all. It was a pleasure.
Thank you.
Great.
Thank you.
Thank you.